welcome to this Thursday trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. As the CBN prepares to meet next week, Monday, we get an overview of the monetary policy environment in Nigeria. An Access Bank PLC and the Central Bank of Kenya Group PLC sign a binding agreement to acquire 100% shareholding in National Bank of Kenya Limited. Well, we'll gauge the impacts for investors. And safe haven asset gold hits a fifth record high in March on a Fed rate cut deal. It's great to have you join us on the show. I'm Ladi Williams. First off, let's kick off with some markets that we track here, with oil prices slightly lower, even after a surprise U.S. crude stock drop, and the U.S. Federal Reserve sticking to its outlook on rate cuts. So yes, there are going to be rate cuts in 2024, but we don't know the exact month that's going to start. And we see Brent reacting to that. The $85.80 a barrel was quite a dovish response there from the U.S. Fed, but some still get some hawkish undertone with the decision we got yesterday. WTI crude, that's the U.S. version, down 0.25% at $81.06 a barrel, still holding on to that $80 range. Crude inventories in the United States, the world's biggest oil consumer, fell for a second week. That's according to the U.S. Information Administration report, and that was yesterday. So we're seeing that weighing on prices in the oil market at this time. Let's get a check on the metals market now. We see gold prices hit a record high for the fifth time this month after the U.S. Federal Reserve signaled it would press ahead with 3 rate cuts. And we see gold, the safe haven, hitting this new level, $2,203 per ounce, up 0.80%. Silver, not left out, but a big move there, 2.41%. We did get that report that silver was outshining gold. You know, somehow we can see that with a big 2% jump, $25.71 per ounce. Then palladium is not left out too, $1,033, up about 2.01%. And it's all about rate setting at this point. Rate setting season right here globally, and also in Nigeria next week, the central bank will have to meet again. And we see the new leadership of the central bank have been very busy trying to stabilize the FX market, tame inflation, and push for full employment. So recently, the CBN Deputy Governor for Economic Policy Directorate gave an overview of the impact of recent reforms and outlook for the Nigerian economy, with total assets in banking industry there, 141.7 trillion naira as of January 2024. It's up by 84% in 1 year. Quite a positive there. And the equities market is the 4th largest stock exchange in Africa, with a market cap of over 58 billion. And definitely we did see that impact, you know, the reactions to all the reforms that we've seen so far. The market, the all-share index did cross that 100,000 level for the first time ever. So we see investors were quite excited about all of that. So for the environment, we see non-oil output that grew by 3% in 2023. Oil GP expanded by 12.11% after 14 consecutive quarters of contraction. So that's a positive. Year-on-year inflation rose sharply, though. That's where we have a little issue right now. It's still inflation still rising, you know, at this time. Some say some months at a slower pace, but other months come out really, really hot at this time. So they give out outlook for what to expect for the Nigerian economy. Output is projected to grow by 3.20% in the first quarter of 2024 and 3.22% in the second quarter of 2024 right here. Headline inflation is expected to rise, though. That's still a snag in the wheel there, 32.63%. That's the expectation for March. External reserves is projected to increase marginally to $35 billion at the end of March 2024. We know we did get sub 33 billion, you know, at some point, talking about the external reserve. So this is a positive projection there for the external reserve, which gives the central bank more ammunition to defend, the naira at this time. All right, let's look at other matters now. At a time when not just Nigeria but Africa is facing harsh economic realities, which is affecting businesses, building strategic partnerships between chief executive officers and chief financial officers is a model which businesses should adopt. And this is one of the survival strategies shared at the first Lagos Business School CEO Leadership Summit held in Lagos. The director of the program, Mr. Patrick Makimuton, admonishes that irrespective of size, business owners have to be intentional for growth and sustenance. Take a listen.
Financial reporting.
Chief executive officers and chief financial officers are the major participants at the Lagos Business School CEO Leadership Summit. The essence is to explore the changes which have been effected in the roles and responsibilities of CFOs and build a strong synergy with their CEOs.
The role of CFO has evolved beyond what it used to be, from financial stewardship to becoming strategic partners and drivers of sustainable growth.
It is important in our roles as well to be an active participant of transformation initiatives, right? Because of our vantage position, it is important for CFOs to leverage the helicopter view of the organization. We see everything in the organization.
Ensure we plan those quite well.
The executives understand the change in the roles and the necessity to embrace them.
In our business, we think of a CEO as a chief entrepreneurial risk-taking officer, so chief risk-taking officer, and the CFO as the chief risk management officer, in the sense that generally the CEO is trying to take you over the cliff, and there's a CFO who's trying to make sure that you don't get to the cliff and is stopping you. But that's not alluding to numbers. Numbers are a lagging indicator in any business. By the time you're looking at numbers, the damage in any business has been done. And for anyone to play a role in actually helping to maintain numbers, they need to be at the point at which decisions are made that affect numbers.
The CEO's key strategist, the CEO keys executioner, because what Olu said is spot on. Strategy, beautiful, nice, 10% of the time. 90% is an execution.
Lessons shared here are useful to even small businesses.
The first thing for small businesses is you need the right skill to ensure that your business is first able to survive and then able to compete and grow. The CEO is the flagship leader. We know that. But the CEO requires knowledgeable team members at the C-suite level, at the leadership level. The CFO has unique skills. But the CFO increasingly is there to share in the visioning, the strategizing for a small business. What is the path to becoming a bigger, sustainable business?
And they are using them to make business decisions.
Lagos Business School plans to share similar strategies annually as its contribution to boost economic activities in the real sector. Ini John Mekwa, Channels Television News.
All right, and still see more positives coming from the central bank. At this time, we see a report yesterday by CBN showed that an announcement, actually, that the complete clearance of valid foreign exchange backlog has been completed at this time. And we did see the Naira react to that. Let's get the expected impact now. Joining us is Gospel Obele, Chief Economist at Streetnomics, joining me via Zoom. Great to have you on the show.
Thank you so much for having me, Ladi. Good day.
Fantastic. So definitely FX backlogs. We've been talking about this since, say, 2022, 2021 into 2023. That's dominated, headlines. Nigeria had to clear all of those backlogs. And now we did get the report from the CBN saying that they have cleared all outstanding FX backlogs at this time. But for verified people that needed to be paid, at this time. So we're seeing the Naira reacting. It did touch about 1,400. We got that report from the black market and, also the official window. We're seeing some strengthening there. So are we out of the woods yet with what you're seeing so far?
I would say that we are beginning to fairly, get a hang over the narratives in terms of clearing backlogs, because that's a major part of the whole challenge you face with, initiating new levels of artificial scarcity, bringing about speculations in the market and all that. So, yeah, clearing of backlogs is a sort of very good way to go, which is a necessary condition to happen. But I would not still see that as we are, nearing the wood yet, in terms of seeing a bright tunnel at the end of this challenge. There's still a sufficient condition that needs to be met, which to a very large extent has to deal with working closely with the fiscal authorities to ensure that required control measures or structural reforms are being led, and preferably also being supported by the Apex institution to ensure that we're relaxing the demand side for these items that border heavily on FX needs or FX demand, as the case may be. So yes, as much as we've cleared the backlogs, it still doesn't speak to the fact that we've also been able to harness supply critically to meet local demand, or it still hasn't pointed out the need to relax local demand for foreign exchange. Not necessarily by forcing that relaxation of local demand, but by ensuring that we're creating incentives to attract people away from having to demand FX, as the case may be.
And what do you think could be the next development or next announcement, from the CBN that could actually take the Naira sub 1,000, to the dollar?
Well, the next announcement may likely still be areas around managing the demand cycle and probably facilitating win-win relationships with the bureau exchange operators and critical stakeholders who supply dollars to the Nigerian market to ensure that there is a reasonable rate at which the market is sort of operating, and that would mean that the central bank will sort of be interfering with market forces to a large extent. Which, in my own opinion, will be very sustainable, because again, it doesn't still fix the fact that there's a supply issue and there's also a demand issue. I know that fixing supply will be likely would likely hinge around how do you work with critical stakeholders, like access to market for MSMEs who are ready to export, and how you partner with fiscal authorities to ensure that you're raking in more supply, and how you're attracting people away from demand. Unfortunately, both the supply side and demand side dynamics are a very, very tough work to do, or it would be very difficult for the Apex institution to pull on themselves. And even if they do in partnership with the fiscal authority, it's sort of like a mid to long-term hard work that needs to be done that it doesn't seem as though any party is really ready to face that heat right now, because to border a lot on many very touchy topics that we haven't been able to face, quite honestly. So I think they will probably want to look for low-hanging fruit that they could use to sort of encourage supply and relax local demand. And I also have the scare that they may not go about the communications or dealing with those things rightly. Like I mentioned earlier on in previous outings, that I do not think that the future of the foreign exchange in Nigeria would be without the parallel market. There has to be an interesting and forward-thinking way to include the workings of the parallel market in the future of the exchange. And that's the only foreseeable way you can really get out of this mess in a very sustainable way, particularly.
Right, and definitely the MPC is meeting next week. That's Monday. Then we'll get a decision on Tuesday. What are you expecting?
Well, quite honestly, what I'm expecting may not necessarily be very, very, very important in this context. But top of mind in terms of answering your question will be preferably a rate hold. A rate hold, because lots and lots of policies between January and now has been rolled out in terms of FX, customs, inflation, and all of that, both on the fiscal and the monetary side. We want to see how those things will align and help to correct market imbalances. All right, so we need to pace things out. I'm also taking into consideration that at the last time, the previous decision was an interest rate hike of 400 basis points, which technically means from 18 to 22.75%, and that's really a huge hike that we've not seen in recent times. So you don't want to have another hike at the back of that, leap increase, as the case may be. You want to be able to watch how the market will respond and how the market will also settle into the more recent monetary policies around the FX, as the case may be. So I wouldn't recommend a hold, and but then if possibly, sort of reducing the rates, which I don't see happening anytime soon, because the central bank also has to be systematically correct within the wider scheme of things in terms of what's happening in other regional markets and the Western world.
All right, well, definitely you're expecting a hold, and I've heard some other experts talk about maybe another 200 basis points hike, but we'll see what happens next week. It's really, really close at this point. Thank you so much for coming on Gospel Obele, Chief Economist, Streetnomics. Thank you.
Thank you for having me. Yeah.
All right, after the break, we got to check on the markets. That's to the moment. See what's happening in the global markets and the local bourse right here in Nigeria. Do stay with us. All right, now let's head straight to markets. We have Will Ibong with the details. Great to have you.
Good afternoon, Laddie.
Will, good afternoon. And yeah, so we have it. We know the bank now that's trying to buy the National Bank of Kenya.
Yes, Access Bank. That's it's one of the great strides they've been, they continued. You've seen them in other markets. You've seen them in Congo, Rwanda, Tanzania. I think they've just, expanding. This expansion plan of theirs is really phenomenal. And, trying to acquire the National Bank of Kenya, that's a big one. It's a huge one. And then we just want to know how that would impact shareholders in Nigeria. We're going to benefit from that, or is it just for the markets there? I know they're probably targeting the AFCFTA, because, Kenya is like a gateway to that trade, in terms of trade corridors. Kenya is one strategic point. So getting into Kenya, I think that is a very good one for the bank.
So you can, do your business, and
then you provide, the solutions, financial solutions to all transactions. Very, very key and strategic.
Well, keep gauging the move.
Bank. So we just continue with the markets. We begin with Africa, where, as usual, sentiments were mostly positive at intraday. At the time we checked Nigeria's NGX, that's at midday West African time. It was dipping. It dipped actually 0.04%. But news coming in says it's flipped to a positive territory. We're going to have that with our analysts. But let's look at South Africa's GSE at intraday. It was up 0.77%. Still in the green, very good. Elsewhere, let's see Egypt's EGX30. It was also up at intraday, 1.5%. And Kenya closed Wednesday's session 2.49% in the green. Now, it's above the 103 points. The Nairobi Securities Exchange has seen a turnaround. It has delivered nearly 30% returns for dollar investors since the beginning of the year. And now, since the Eurobond buyback in February 2024, that's this year, the shilling has been appreciating and has boosted investors' confidence. Let's check out now activities at the NGX. What's driving sentiments? What's caused a flip from red to green? We're going to be talking to Azizat Awonuga. She's the equities analyst at Party and Securities. Good afternoon, Azizat. It's good to have you on the program.
Hi, good afternoon, Will.
Azizat, as we were speaking earlier, you said that the stocks, equities, NGX is back in the green. So what's driving the sentiment? Because this is the first green this week, at intraday. So I just want to know what's happening and if we're going to close in the green, but just tell me the stocks investors have decided to buy.
Okay, so midday, we saw that the market was actually down, but then as, time proceeded, we saw gains on the banking end. Access Bank, it was up 1.1% as a midday, as a now it's up about 3.3%. Same with GTCO, it was 1.4%, midday, and now it's up 2.6%. Even interestingly, First Bank, that was even on full offer yesterday, today it was about minus 6.3% at midday, and now we're seeing that, it's still low, but then it gained a bit, and now it's at minus 4.2%. So we really see traction in the banking stocks. Also, Transcore, it was up at midday around 6.6%, and now it's about 9.2%, up. So that has really driven the market, and now the market is gaining about 0.21%, and hopefully it closes on the on this positive trajectory.
Signs of that yesterday, because we did have 28 stocks gaining to close market against 22 losers. So this positive sentiment coming back into the market is probably no surprise to see that, the market, in terms of market breadth, it wasn't so negative. The correction is there, but we're still having that ping pong movement, that flip back and forth from red to green. But right now we're going to the green, which is a good thing. But let's just see the bank that, I don't know how Access Bank is doing at intraday. Could you just give me the numbers if it's positive? Because we've seen that it's set to acquire the National Bank of Kenya.
So Access Bank currently it's at 23.70. It's positive, but we're not seeing the market fully translate the importance of this news. So we are not seeing investors really. I mean, let's see tomorrow. Let's see how it goes. But right now, we feel like the market hasn't fully digested the news, or the sentiments aren't, as you said, it's been bearish. So let's see what investors do. But I mean, Access Bank, it's a very innovative bank. It's a good bank, and it is currently even undervalued at its current price, right? Their deal or pact to acquire the National Bank of Kenya is a very good one. This is the second bank they're acquiring in Kenya. After they acquired Transnational Bank in 2019. And we really expect a lot, not a lot, but then we expect to see what the new CEO of Access Holdings has in store for investors and, stakeholders alike. So, I mean, they tried acquiring a bank last year and that didn't go through. So now that this deal has been, signed and now just waiting on the central banks of Nigeria and Kenya to do due diligence and approvals, we hope that the market really absorbs this and Access Bank shareholders really get value for the innovation that's going on in the bank and the expansion.
Do you really think that this the benefits will trickle down to investors in Nigeria, the stakeholders here in Nigeria, or is it just going to be focused to the stakeholders that are in the bank, where the bank is domiciled or HQ'd?
So Access Bank is under Access Holdings, which is listed in Nigeria. So hopefully the good results or doing well of Access Bank Kenya is going to impact on the Nigerian market because we have Access Holdings, which is the parent company of the Access Bank Kenya. So investors might actually see a positive, move if the incorporation goes very well.
Okay, fantastic here. But speaking of incorporation, yeah, we know that Access Bank is trying to position itself, target, the Kenya East African market here. Is there going to be like some sort of collaboration with other banks to be able to open up the gateway because of this African free trade area that is, ongoing, to make sure that banks in Nigeria collaborate with Access Bank to be able to provide, financial solutions for trade and other financial transactions that's going to take place? Is there something like that in the offing, or is it just Access Bank moving in and trying to maybe not carrying other banks along? Do you see other banks moving in that direction? That's what I'm trying to find out.
I think every bank has its own strategy, its own expansion strategy, and its own, growth strategy. Access Bank has a vision of being the gateway of Africa to the world, right? So in order to be able to achieve this, they have to have presence in key economic markets across the continent. I do not know if it is in their plans to want to do this alongside other banks, but what I hope for, or what we're hopeful for, is that when opportunities to collaborate arise, the bank takes it on, as it will not just be good to its stakeholders or its shareholders, but even to the economy as a whole, African economy in this case, as with the free trade agreements.
Thank you so much, Azizat Awonuga, equities analyst at Parthian Securities Limited, for sharing your insights on business incorporation.
Thank you.
Thank you. So we move on to the Middle East now, where most major equities in the Gulf traded mostly positive at intraday. Now, news coming in, the UAE Central Bank has decided to keep the rates unchanged. Now, you know that UAE currency is pegged to the dollar and tends to mimic the actions of the U.S. Fed, because we know the U.S. Fed yesterday held rates, and so we see the Central Bank of the UAE also holding rates today. Now, the Abu Dhabi Securities Exchange also announced the listing of fixed income ETF, which is the Chimera JP Morgan UAE Bonds SS Traded Fund. It will be the first ETF to be listed in the UAE and will provide global investors access to a diversified portfolio of UAE bonds with low investment requirements. Now, let's see how the Abu Dhabi index did at intraday. It was up 0.18% to close at 9,286 points. However, Dubai's index was down at intraday 0.25%. We also see Saudi and the Qatari indexes trading in positive territory, 0.79% and 0.08%. Now, let's look at the U.S. and see how that performed. Early trade on today, we see that it climbed climbed after 3 major averages closed at new records, and the Federal Reserve concluded its policy meeting and held rates. Futures tied to the Dow Jones was up 0.24%. We see S&P 500 futures also up 0.34%, and the Nasdaq futures was up 0.68%. Now, these moves follow a winning day on Wall Street that sent the major averages to new closing highs. Now, those gains also come, as I mentioned, reiterating the expectations of the Fed for the 3 cuts for the interest rates this year, which probably will start in June. Now, jobless claims data is something traders are also watching and digesting, as well as existing home sales conditions. Now, let's look at Asia now, see how stocks performed. Japan stocks closed at fresh all-time highs on Thursday as Asia markets climbed after the Federal Reserve maintained its forecast for 3 cuts this year. Now, while holding rates at yesterday's meeting, now Nikkei up 2.03%, Kospi in South Korea also up 2.41%, and the Hang Index in China was also up 1.93%. Now, let's look at Shanghai Index and see how that performed. It also closed in positive territory. We see the Shanghai Index also up at, well, the Shanghai dropped at the close of trade, unfortunately. That was what I was trying to find out, 0.08%, and the S&P ASX 200 was up at the close of trade. Ladi, this is just what we're seeing for Asia now. Shanghai and the Hang Seng Tech Index just kind of like move in opposite directions. Sometimes we tend to see them, you know, not following the same pattern and trend. Right. So you want us to look at that market and see what's really pushing it. So for the Australia's index, we see that the bank, you know, remember that the bank left rates unchanged. So we're seeing that impact, and the composite index that it did say that the purchasing managers index did move up in that
right.
That country. So we're seeing that.
And taking you back to the U.S., you know, at this time, 3 rate cuts. That's what the Fed is
promised. Yes,
is promising. You know, I'm sure investors were quite excited about that because they cannot wait to get their rate cut.
They were. You see that impact on the equities markets was really very, very obvious. You know, that knee-jerk reaction, it was just very quickly. You saw investors jumping at it and saying, yes, we're waiting for that. And I believe we have the Bank of England decision. I think that's out, you know, at this time. We're going to be finding out from Juliana in a little bit to find out what happened. And how the markets to hold rates,
are
but
reacting
we'll see.
in the UK.
Yes, they're expected to hold rates. We'll see how that will happen.
Exactly.
So we don't even know what is going to happen, because people are talking about the inflation rate that has dropped, but not necessarily mean that inflation has dropped. It just means that the rate of inflation in the UK is just accelerating at a slower pace. It's rising at a much slower pace than before. So it doesn't necessarily translate to more money in the pockets of the UK citizens. It just means that inflation is just going at a slower pace. It's cooling, but the impact is not well felt at the moment. So Juliana probably come in and tell us what's happening there.
Exactly. Thank you so much, Will, for the update. All right, talking about the Bank of England, definitely we should have their rate decision at this time. We're going to be finding out from Juliana what it is. I'm sure, well, everyone expected a hold at this time. Juliana joins us from our London studio. We're going to get Juliana to give us that update in a little bit, but definitely the consensus was the Bank of England was expected to hold interest rates in this meeting. You know, seeing that inflation is actually cooling in the UK at this time, still waiting for those targets to be hit. That's in the UK and in the US. Everyone's waiting for that 2% target that the US Fed and most of these central banks have set for inflation rate. Let's try and get Juliana to give us the details now. Well, Juliana, I guess we have the update now on the Bank of England. What is it?
Afternoon, Laddie. Can you hear me? I literally just put my microphone on.
All right, I can hear you, Juliana. So I guess it's a hold.
You can hear me. Okay, yes. So it's a hold, Laddie. All of the economists' forecasts were right that the Bank of England Monetary Policy Committee would keep interest rates at 5.25%, which is still a decade high because, of course, inflation still remains stubborn. Now, I think the main focal point of today's MPC meeting was, of course, the minutes and the update from the governor, Andrew Bailey, who has said, pretty similar to what we heard from the Federal Reserve yesterday, that indicators do suggest that prices may begin stabilizing. So we know that a slowdown in the hiking is imminent, but when are we going to start seeing the cutting? That's the big question at the moment. Pretty surprising. I don't know if you've mentioned this already to your viewers, Laddie, but Switzerland this morning became the first bank in Europe, the first country in Europe to drop their interest rates. Their interest rates was dropped to 1.5%. They're the first to do it. So it does appear as if we are going to start seeing a drop soon. They did say that they believe, because of course we know the Bank of England get to see a forensic check of what's happening in the UK economy more than we do, much swifter than the Office for National Statistics. And they do believe that we're certainly out of that shallow recession we got in at the end of last year. And of course, we got that UK inflation data showing that inflation had fallen to below 4%. So we are on our way, but not just yet. So yes, just come out of the meeting, and rates have been held at 5.25%.
Yeah, quite a big move by Switzerland. I guess that's why they have most of the billionaires in the world at this time. And I guess it'll be cheaper for them to borrow, a little bit cheaper for them to borrow at this time. But we also have data there in the UK saying average rent in the UK, that's jumped about 9% year on year. How are investors seeing this data?
Yeah, this is really interesting. It's really expensive, again, to live in the UK. It's expensive to live in the UK anyway, but when you add the cost of living on that, it is really difficult. And we have had fresh data out this morning from the Office for National Statistics, basically looking at the renters market, and they're showing that prices year on year have risen, I believe, nearly at 10%. So the average monthly rent cost, this is every month in the UK, the average is about £1,200, Laddie, which is the equivalent to about 2.2 million naira. It's really expensive, and that's the average. Of course, if you want to live in London, I don't think you're going to get a property for £1,200 a month. And this is a real issue. And I think the fundamental problem at the moment is that we're not seeing an increase in people registering or homeowners registering to be landlords, and there is a lot of demand. So lack of supply, lots of demand. Of course, you're going to see price pressures here. And I think one of the reasons why homeowners are not becoming landlords is because of the mess that we've seen in the mortgage market over the past year or so, which again was triggered by Liz Truss and Truss-onomics. Mortgage rates were flying off the charters. They've since come down, but it has had a knock-on effect, which is why people are paying, eye-watering sums just to be able to have a roof over your head.
Right, and definitely the markets must be reacting in the UK to this whole decision.
Yeah, absolutely. The markets are in tip-top shape at intraday. Again, the Bank of England Governor Andrew Bailey has hinted that they are seeing indicators suggesting that price pressures are finally stable. An interest rate cut is imminent, but it's been kept at 5.25%. This has really cheered investors. The all-share is up. It's up by 0.91%. The FTSE 100, the UK blue chip index, that's up by 0.95%. In the domestic market, the FTSE 250, that's also flying high intraday, up by 0.80%. In the currencies market, the British pound is currently trading down against the US dollar by 0.22%, down to by the euro at 0.08%, and the British pound is trading down against the Japanese yen by 0.01% at intraday, Laddie.
Definitely, we'll keep tracking to see how the markets actually close for the final trading day of the week. That's tomorrow. Thank you so much, Juliana. All right, let's get a check on Europe now. See, the European Union is pushing ahead with a plan to buy weapons for Ukraine with frozen Russian asset profits. Well, Akram Makishi is with DW and joins us from Berlin. Great to have you, Akram. So what are the details of this plan?
Thanks for having me, Ladi. The European Union has outlined a strategic plan to allocate billions of euros from frozen Russian assets to assist Ukraine. The draft plan would see 90% of the revenues from seized Russian assets being funneled towards an EU-run weapons fund for Ukraine. This initiative aims to utilize the windfall revenues from central bank assets to support both the military defense and the reconstruction efforts of the war-torn country. The European Commission has proposed to redirect 3 billion euros annually to Ukraine, marking a crucial step in international support for the nation. With the first disbursement anticipated as early as July, this financial assistance is predicated on the utilization of approximately 210 billion euros in Russian central bank assets frozen within the EU, principally at the Euroclear depository in Belgium since the onset of the conflict in 2022.
And what would you say prompted the EU to go ahead with this plan?
Well, with the worsening conditions on the battlefield and delays in financial support from the United States due to legislative stalemates, the EU's proposal has become increasingly urgent. EU representatives said the plan has a dual objective of maintaining pressure on Russia and ensuring accountability for its aggression and the resulting widespread devastation. EU's initiative has been coordinated with the G7 nations, including the United Kingdom and the United States, and that underscores a unified stance among leading powers. Over the next 4 years, the profit generated by frozen Russian state assets is expected to be worth up to 27 billion euros. Ukrainian Prime Minister Denis Shmyhal acknowledged the proposal as a positive first step, but advocated for a more comprehensive approach to leveraging the frozen assets for Ukraine's benefit.
All right, what should we expect from the markets in Europe today?
Well, today, European stocks are expected to trade higher, Ladi, and Wall Street experienced a record-breaking day as traders welcomed news that the Federal Reserve still see 3 interest rate cuts this year, even after recent data point out to a bounce in inflation. The Federal Reserve held interest rates steady for the 5th time in a row, and Fed's projections show that they see 75 basis points of rate cuts before the end of the year. That means nothing has changed since December's outlook. And the positive news was reinforced by the European Central Bank, confirming the market expectations. European Central Bank Chief Christine Lagarde said yesterday that there is a risk in cutting rates too late, suggesting that ECB could also make its first reduction in June.
All right, every investor looking out for rate cuts in 2024. Thank you so much, Akram, there with the details from Europe. Well, let's get to the commodities market now. Nigeria is the largest producer of tomatoes in sub-Saharan Africa with an annual output increase of 33.3% to 2.4 million metric tons in 2023 from 1.8 million metric tons that was in 2021. Well, with this large-scale production of tomatoes, we see Nigeria is the 13th largest importer of tomato paste globally. Well, let's talk to Dr. Ifeoma Awokolo, our research manager at Financial Derivatives Company. Great to have you on the show.
Good afternoon, Ladi. Thank you for having me.
Yeah, so can you explain this contradiction here? I would believe we should be a big exporter of tomato paste with our production of tomatoes at this time.
Okay, I quite agree with you, Ladi. This is a paradox. A paradox in the sense that we are the largest producer of tomatoes, at the same time, the top importer of tomato paste. And the factors underlining these are not far-fetched. One of the factors include harsh weather. We begin to see that the issue of climate change is playing out here, and a lot of farmers are ignorant of that. You see that the climate change gives what we call intense weather conditions. So you have more of sunshine over there in the north, and this affects production of these tomatoes. And another one is the post-harvest losses that they have. Okay, during our last survey, market survey, I spoke with one of the farmers and he told me that they have about 70% of losses due to harsh weather, and they don't have the facility to be able to keep these tomatoes cool until when it gets to end users like you and I. So if you look at these losses, we already have a gap, a supply gap, and to bridge this gap, there is need for importation. That's why we see the influx of tomato paste into Nigeria. And to address this issue, we have to begin to let these farmers know the effect of climate change. A lot of them don't even know what climate change is. We need to let them know. And some of these things, what climate change does to crops is that it makes them prone to disease, pest and diseases. And in recent time, the tomatoes farmer have continued to battle what we call tomato Ebola.
Right.
And this is what is causing this paradox.
And we know tomatoes are widely consumed in Nigeria. Every home has, tomato at one point, and they always have to, replenish it. And we've seen other vegetables increase in price. We've seen about 40% hike, and that's just February here. And we're seeing food inflation also rising at the highest level we've ever seen. So talk to me about how much the average consumer, can take at this time.
Okay, I want to talk about inflation. Food inflation is over the roof right now. And the price of tomato is even higher than food inflation. So the prices of commodities like tomatoes and the rest during our market surveys are what are really pushing food inflation. You understand? And food inflation is the major driver of headline inflation. I'm going to see that the prices of tomatoes are on the increase, and this can be attributed to the losses they have. Of course, they want to make some gains. So all these losses and all the rest is filtered into the price of tomatoes. That is why we see the price of tomatoes hitting the roof. And again, shortage. We have a lot of shortage, and people are beginning to know the importance of fresh tomatoes. Aside using it to cook, stew, or jollof rice or whatsoever, you begin to see that it has these vitamins that is very essential for human body. Okay, it contains what we call contain lycopene, and lycopene is very essential. It helps to fight free radicals that helps you to combat cancer and all the rest. So people know the importance, they go for it. So it is something we cannot do without. The price will continue to increase because we have the festive period coming, which is Easter. People want to shop for Easter. And we have the ongoing Ramadan. People are fasting and they store all these things for their daily consumption. Right. But there's good news because the CBN has been able to provide about over 2 million bags of fertilizers to industry of agriculture in order to help to boost crop yield. And in near or medium time, we're likely going to see the prices of food come down.
All right, we still see the leadership of the current leadership, helping with some outstanding interventions right there in the agri sector. Thank you so much for coming on. That was Dr. Ifeoma Nwonkolo, Research Manager at Financial Derivatives Company. Thank you.
Thank you, Larry, for having me.
All right, let's get a quick check on some other stories in Africa now. See, the International Monetary Fund officials have arrived in Ethiopia this week to discuss a new support program for the country, less than 2 weeks before a debt service suspension deal that's set to expire. The team, they've landed in the capital, Addis Ababa. That was yesterday for a 1-week visit. And Ethiopia's government expects to face an estimated $11.5 billion financing gap over the next 4 years as the economy is struggling to recover from a civil war in its northern Tigray region ended in 2022, as well as a severe foreign currency shortage. And the government that's the Kenyan government spent more than half of $1 trillion shillings to service debts in the first 2 months of this year. even as it remains with a larger burden of repaying more than 700 billion shillings in the 4 months to June. Latest data from the National Treasury shows that in January and February, the government spending and public debt was 560 billion shillings. The Treasury in the update in government revenues and extra issues for 8 months starting July 2023. That's supposed to end February 2024. It notes that the total issues towards public debt service hit 1.15 billion shillings in February. All right, to our next conversation now. We see days after the reopening of Nigeria-Niger Republic land and air borders by the federal government of Nigeria, Nigerian authorities have not said anything, even as they maintain their entry points closed. Let's find out why. Joining us now is Fidel Owusu, International Relations Analyst, Riley Risk Inc. Great to have you on the show.
Thank you very much for the opportunity, sir.
So why are the Nigerians still keeping their borders closed?
Yes, so as I have said earlier, this is about power play, it is about power politics, and it's about power grab. In fact, when ECOWAS initially announced the removal of the sanctions, we didn't see any formal statement, or we didn't hear any formal statements coming from Niamey. So the junta was quiet, and the dynamics is such that now that ECOWAS has decided to lift such sanctions, what is going to happen is that then everybody is going to look up to them and ask, what next? Because after the sanctions have been removed, the next thing is to talk about democracy. The next thing is to talk about liberal systems and institutions working. And it would mean that in a short time, the junta would have to hand over. This is what they don't want to hear. And currently, even as President Tinubu asks that these sanctions are removed and borders are opened, they are going to maintain theirs closed until such time that they see favorable to themselves. In fact, all the talk about sanctions stressing the local people, spare parts being scarce, and all other things are now not being talked about again. The junta is just keeping the place shut while Nigeria opens its borders, and that is very unfortunate.
All right, so what are you seeing happening next at this point?
Yes, so now it is a wait and see push that is being taken by ECOWAS and Nigeria. They are waiting to see what the junta is next to do. And in recent times, there are severance of ties with the United States and other moves they are making shows that they are more comfortable with being with Russia and other powers other than the West and perhaps ECOWAS. So far, ever since sanctions were removed from these junta, it's not only Niger, Mali, Burkina Faso, and Guinea. Ever since these sanctions were removed, no one has issued any statement to show that they are willing to work with ECOWAS towards democratic transition. And so all we can say is that we are all waiting to see what they are likely to do. But one thing is for sure, is that they are doing everything to have an upper hand in any negotiations that may emerge later.
All right, we'll see if that maintains. Thank you so much for coming on, Fidel Owusu, International Relations Analyst, Riley Risk Inc. Thank you.
You're welcome.
All right, let's get a check on other markets now. We see Bitcoin and Ethereum, big recoveries we're seeing in the crypto market at this time. And if we take a look at the top cryptocurrencies we track now, we see Bitcoin up about 5.89% this afternoon. Ethereum, $3,531, big 9%. That's the biggest jump we have with the top 100 cryptocurrencies that we track on coin market cap. Following that is BNB, that's the native token for the Binance Exchange, $568 per coin, up 7.58%. Cardano is not left out, 63 cents, 4.74% up, and XRP 62 cents. That's up 4.27%. We can look at the top headlines in the crypto market. We're still seeing the likes of MicroStrategy still loading up on a lot of Bitcoins there. 9,245 Bitcoins. That's the recent purchase there. So they're going big as usual, adding to their stash of Bitcoin at this time. Other top stories we see in the market: OKX exchange, another top exchange, just like Binance, to cease operations in India at this time. So we're seeing regulatory crackdown right there in India, and see OKX exchange trying to get out at this point. U.S. Fed dovish statement yesterday. Some see it as dovish, some still see it as dovish, hawkish, at this time. So we'll find out how that's impacted the crypto market at this time. Let's speak to Gilbert, your partner now, financial market analyst. Hello, Gilbert.
Yeah, Mr. Ladi, greetings.
Greetings, Gilbert. So we're seeing a big recovery. Everyone was thinking Bitcoin might go sub 60, with the rate it was dropping at this time. But after that, the comments from the Fed Chair, Jerome Powell, yesterday, we're seeing a big recovery. Is it because of what he said?
I think, first of all, that plays a large role because, the Federal Reserve, we actually expected earlier rate cuts, but this did not happen, and they are still concerned about inflation and want confidence first before it could start lowering rates. But this time around, certain persons anticipated that there are likelihood that we may rather have rate hike, but at the end of the day, it was rather rate was held steady. And the next thing was also projections that rates will start reducing at least 3 times this year. And then there were also expectations that rate could get to 2.1% this year, which is close to the 2% target by the Fed. And then this came like a breath of a fresh air to risk on asset with Bitcoin as well in particular. And then, if you really look at the drawdown that happened for Bitcoin, I rather see this as more of a childish price pullback, because historically, Bitcoin always pulls a multiple 30% drawdown during the bull market. But what we have, the present pullback we have, is just something I really regard to be childish. And but yet, the market seems to be recovering so fast and probably wants to start its next leg up.
So you think the sell-off is over right now in the crypto market? What do you think could be that headwind, going forward with this recovery that we're seeing right now?
First of all, if you notice, Bitcoin actually fell between a rising wedge. I remember in our conversation we had last week, we first of all raised the concern about the CPI data and then the rising wedge and the bearish divergence, which meant that even though there are excitement and bullish sentiments in the market, there are large possibility of a drawdown. So Bitcoin was falling through the rising wedge and it was testing certain support level. And we had 2 more supports that we're expecting it to touch before we could have this kind of recovery we're having. So the fact that we actually bounced through a given support level meant that that support line is strong, and it's a way to recovery. So I think our drawdown moment is already getting fatigued, and the market is priming for after this dissipation period, which I think is getting almost over. Bitcoin will be ready to go above 70,000.
Right, and still looking at Binance in Nigeria this time, we did hear the federal government did ask for data, most of their users on the platform, and they've also been speaking with the directors that have been held in Nigeria. Have you had any updates on that at all?
Not really, but regulation is inevitable. I know there are certain investors and entrepreneurs that are not maybe even though they believe that what the federal government is doing is right, certain persons were not really pleased with the application, or the strategy they're using applying it. But first of all, if you compare the Nigerian government and their friendliness with cryptocurrency compared to most first world nations, you will know that Nigeria is ahead of most countries out there. I really know that regulation is inevitable. We need it actually in the Nigeria crypto industry. This industry provides economic benefits also for the government, the people, and also this industry, which Nigeria is one of the 3rd largest providers of liquidity in the world. Right. It is a good thing that we wouldn't just participate as citizens and entrepreneurs. We also want the government present, but they should understand that there are Nigerians involved in this, and they also want Nigerians to do well as we play to compete with the world.
All right, I guess we'll keep tracking to see what happens, going forward. Thank you so much, Gilbert Japata, financial market analyst. Thank you.
Yeah, thanks for having me.
All right, so that's the show today. Remember, you can visit channelcv.com for more updates. You can also go on YouTube and watch this again later on. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.